Hey, everybody, welcome back. It is Saturday morning and this is Multifamily Unplugged. Welcome back. And if you're here for the first time, buckle up. Thank the person that invited you because you're in for a treat this morning. Have a great guest this morning. But before we get to that, I want to remind you coming up October 17th and 18th, our annual Multifamily Summit. This is our fifth virtual event. And if you're somebody who wants to be at an event this year, but you can't travel, you can't take the time out, maybe you can't even afford it, this is a virtual event. It's going to give you a platform and the knowledge and kick in the butt that you might need for your multifamily business. October 17th and 18th. Hey, go to multifamily24.com and get registered for this year's event. I'm super excited about the list of speakers and panelists this year and everything that we're going to be providing. So whether you are brand new in the multifamily business or you've been in the business for a while and maybe you're feeling a little discouraged, maybe you need a kick in the butt, maybe you're trying to figure out how to get to the next level, or you're just looking to network with some other great like-minded individuals, this is a place for you to be. So 2 days online, you can be in the comfort of your home, in your office. You can be there the whole time. If you can't make the whole time, it'll be recorded. You can get access to that recording. So there's a lot going on this year. I'm going to have a couple of great speakers. All my speakers are great, but a couple of people will be Dugan Kelly. He's going to talk about the security side of the business. Karen Hall, she's going to talk about self-directed 1031s. We're going to have Vina Jetty on. My guest this morning is going to be a speaker. You're not going to want to miss this year's event. It's going to be awesome. So this morning, our guest is Vessi Kapoulian. I know she's going to kill me because I butchered that, but she's from Los Angeles. Her company is DBA. And I love this. It's Dream, Believe, and Achieve Capital Group. Let me bring Vessi in. Hey, Vessi, good morning.
Hi, Mike.
How
Great.
are you?
Doing fantastic. How about you?
Awesome. Hey, I was just saying when I was introducing you, I was just saying that your company's DBA, Dream, Believe, and Achieve. I
Yes,
love I love that. And we'll get into that in a bit, but I just think that's a great name, great acronym for people to, that's what we have to do in life, right? It's all
absolutely.
I know that your vision started with a dream.
Absolutely, yes. And there was a lot of thought that went behind creating the name of my business. And really it reflects not only my vision, but also really provides a roadmap for anyone who's looking, whether it's investing in real estate, starting a business, but really a three-step format or blueprint on how they can make that happen. And I can definitely talk about the meaning of each word if you think that will add value to the audience. But yeah, it was not coincidental.
Yeah, so I want to do that, but before we do, I start all my shows with one question. And, I always say I'm going to write a book on this. One of these days, I'm going to take everybody's answer. I'm going to put them in a book and publish a book on it. But um, the question I like to ask is in one word, what best describes you personally and professionally?
If there's one word I pick, I would say resilient. And
Mm.
it's resilient, being able to push through some of the challenges that inevitably come along the way, especially if you're choosing the path of growth and continuous learning. So resilient would be my word.
Now we have four words to talk about. So tell me this, how come, why resilient? Did you have a challenge in your life? Did something happen along the way that caused you to say, hey, I have to be resilient or I'm gonna become more resilient?
There have been many moments in my life, and if I go back to my early years growing up in Bulgaria, right? My dream, for example, was always to come and study in the US. The US was this amazing world that I could take a sneak peek into through maybe movies and other people's stories. And just for context, I grew up behind the Iron Curtain, and that's why access to anything outside of the curtain was very restricted. So it was my dream to study in the US, and I didn't come from a family of means. So the only way for me to accomplish that was to earn an academic scholarship. And so I set my mind on doing that. Thankfully, my parents were very supportive, and yeah, learned English, took all the tests, of course, focused on academics, and was ultimately able to come here. But it was not easy. At the time, there was no internet, so it was a lot of trips to the library, mailing letters to universities, corresponding back and forth. I mean, it was what people now call the old-fashioned way. So it required a lot of patience, persistence, and then even coming here, right, in the US, and going through, I took the traditional path of going to school, getting my good grades, climbing the corporate ladder. And there were even moments throughout my professional career that were difficult, such as going through corporate restructures and seeing some of my very dear colleagues let go. And those served as really good lessons to prepare me from what ultimately happened to me, right, in corporate America, which was, I was also let go at one point of time. And thankfully, I had taken those lessons along the way to open the door and get on the journey of entrepreneurship that I'm currently on, and that I always eventually dreamt of being on. So I can speak on and on, but it's really in those difficult moments is, for me, what served me well is, first of all, keeping my faith in God, that these are challenges that He wouldn't put you up through if He didn't know you couldn't handle those. Rising up to the occasion, leaning into the pain so you can extract the lessons learned from it to propel you further and position you better on your next journey. And it's okay to take a moment and cry and lick your wounds when you go through some of these challenges, but don't sit there too long, because it's as Churchill said, right, it's the courage to continue that matters. Sitting there and crying, it doesn't really help solve the problem or move you out of the situation. Is how you move forward and who you become along the way. So these are just a few thoughts and concepts that help, at least for me, they've been helpful to push through some of these challenges.
Yeah, that's awesome. I couldn't have said any of that better, you know. And I don't, you know, you and I have known each other a couple, 3 years now, and you know, I don't know that I've known really that part of your history and your past, and kind of interesting. So, you know, good for you for making that effort and being where you're at today as a result of it. You know, resilience is important. So let's talk about DBA, right? Where did that vision come from, and what does DBA Capital Group do? And you know, talk about dream, believe, and achieve for yourself.
Absolutely. So as I mentioned earlier, there was a lot of thought that went into setting up the name or selecting the name, and why dream? Because for me, it started, and even often people ask me, how do you get started? It really starts with having clarity of goals. What is the dream? Where are you headed? But most importantly, why? The why is extremely important, because inevitably, as we discussed a moment ago, challenges will arise along the way, and it's your why that will help pull you out of those moments or propel you further during periods of success. And then believe is believing in yourself, overcoming the limiting beliefs, working on mindset, which inevitably is probably one of the biggest struggles. Can I do this? Will I be successful? Am I good enough? A lot of these questions that people ask, or at least that I had to push through. And part of that, working through that, involves not only working on your own mindset, but surrounding yourself with positive, like-minded individuals, mentors, coaches, basically finding your tribe, role models that will show you the path, show you that it's possible, and then achieve, which is one of the just as important step. It's really about taking action, because none of these dreams will be real if you don't take action, take that very first step. It doesn't have to be a big step, right? Something small, but take the first step, then the second, the third, and before you know it, when you look back, you will realize how much progress you've made. So that's behind the vision. And what Dream Believe Achieve Capital Group does today is I work with high accomplished professionals, business owners who are looking to generate passive income streams and tax efficiencies through well-vetted cash flowing investments in real estate. And recently, because again, my passion is to educate and empower investors as part of my activities that my firm does, is I also started a 10-week course that helps beginner investors effectively and efficiently analyze deals so they can make savvy investment decisions.
Wow, that's awesome. Good for you. So you're actually teaching people now how to underwrite and look at deals, and that's how you and I kind of first met. Is we were underwriting some things, and you were looking at some of the things we were doing, and I know that you sharpened some of my skills back then by just some of the questions. I think questions are so powerful, right? And we can learn a lot. And people have said to me, that I ask a lot of questions. Well, I'm kind of the what if guy, right? Hey,
Right.
what if rents don't go up?
Right.
What if the market shifts? What if this employer that's a major employer in town cuts half their workforce? What happens? But those are the things you have to know, right? So,
Well, absolutely. You have to ask a lot of questions, right? As an investor, active or passive, right? That's the one thing we can control, which is doing the upfront diligence. And that's also a way to minimize the risk. But especially for passive investors, I always encourage them to measure twice, right? Measure twice,
yeah,
cut once. You don't really control the day-to-day operations as a passive investor, but what you can do is ask a ton of questions to ensure the deal fits the investment opportunity fits your risk tolerance, your investment criteria, your goals. And of course, the answer is different for everyone because those are
right.
never the same.
That's an old carpenter cliche, right? Measure twice, cut once. So that's funny. I like that. I use that a lot too. So hey, listen. So as a private investor, a passive investor, and if I wanted to be in a real estate offering that you brought to the market, what kind of returns could I be looking for as a passive investor in today's environment, right? We're not in that, we all know real estate's cyclical, right? And we're on the downside of that cycle right now. We're probably in the fourth quadrant of that. Um, as a real estate investor, what could I be looking at as an investment opportunity today?
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Do you think it may be time to take a look at alternative investment options for your portfolio? Passive investing in multifamily real estate could be that option. With no tenants, trash, or toilets, providing a solid return on an annual basis that outperforms traditional investing, also receiving a monthly or quarterly return along the way. These lower risk and secure assets are a great hedge against inflation. If you want to learn more about these types of opportunities, you can email me directly to schedule a 15-minute consultation to see if you qualify. Just email me at mike@mikemorawski.com.
Yes, and my background, what I focus on is multifamily. So I want to mention that because numbers I'm about to share are more specific for the multifamily space. Of course, once you start venturing into other asset classes, those numbers will change, and specifically stable value add multifamily, where you're going in, improving, doing minor improvements, right, to the interior, exterior, not major redevelopment. And so in that particular space, I would say in today's environment, anywhere from 14 to maybe 16% IRR, 5 to 8% cash on cash return, and probably around 1.5 to 1 point, maybe up to 2 times, but at most 1.8, 1.9 equity multiple is what I think is probably more realistic for deals today. That is not to say I don't see deals coming across my desk with 18, 20% IRRs, and those look really good on paper. But what I encourage investors to do always, no matter the market, but especially in today's market, is to look under the hood and peel the onion, because the outputs or the returns that I just mentioned are a function of the inputs or the assumptions that the sponsor makes, the project to create the projections and future pro forma cash flows, as well as their experience and track record, which feeds into how realistic and achievable those projections are. And so what may be presented to you as a 20% IRR deal may be in reality a 10% IRR deal. So I don't want people to get caught up so much in the numbers. It's a good starting point, perhaps, as you're filtering deals, especially if you have a healthy deal flow. But once you don't necessarily eliminate a deal just because it has lower returns, because personally, I would much rather take a 14 IRR deal that's well underwritten, well risk mitigated, relatively safe. Of course, it's not 100% risk-free because we're talking about investments and every investment has risk, but I would much rather take a 14% IRR deal than a 20% IRR deal that's aggressively underwritten and with substantiated assumptions.
Yeah, unfortunately, I think there's a bunch of operators out there that will inflate rent growth, deflate expenses to make the returns look better. And then it kind of gives you an unachievable event, right? So now you can't deliver to your investors. And I like what you said, I mean, if the appetite of capital out there today is 15%, a little bit more, that's a safe place to be. And the good news is, though, if you're in a good market with a good asset, and when the market changes, you will do better. So that's that old under promise, over deliver, right?
Oh, absolutely. And that's key, right? Because the market is what feeds into the inputs or the assumptions that you will make. That's probably one of the first thing I would say is vetting the sponsor, in my view, but then second, market, and frankly, the deal would be last, because those first two ingredients, the sponsor and the market, are so instrumental. And to your point, I view the market as the either headwinds or tailwinds, depending on whether you're in a strong or bad market. But that really could help tremendously, especially when you're going through maybe perhaps some market fluctuations as we're experiencing now, and macroeconomic fluctuations as well.
Yeah. So how about when you're betting a deal to partner on and raise capital on, are you looking at a specific product class in the multifamily space? Are you looking at specific markets? Talk a little bit about markets and product class.
Yes, so that's a great question, and the approach I've chosen to take is be very focused. And so currently I focused on stable value add, a multifamily class B, C plus properties, 150 units plus or minus in the Southeast markets. Why is that? That is not to say there are no other great markets or great asset classes or business plans within multifamily out there, but I really want to be the expert in what I do. And down the road, I will probably diversify, but especially at the beginning of the journey, it's extremely important to be hyper focused on what you do so you can serve your investors better. And oftentimes they come to me, right, with questions. They will be looking for guidance. So I want to be that expert in that particular area. With that said, I will say that the sponsor is just as important to me. Make sure we have values that align, transparency and communication, a strong track record, and good operational systems set up. So I say all that because if I find an outstanding sponsor to partner with, but maybe they're slightly outside of those Southeast markets that I mentioned, there's definitely the possibility to make an exception. But again, then I would really drill into the market because that would be an area perhaps that I'm not as familiar with, and certainly would be looking for strong underwriting, a lot of cushion, so to speak, in the numbers to get through my own comfort level.
Yeah, interesting. And are you seeing good opportunity out there today?
I think the key is to continue evaluating deals. Just for perspective, right? In the last 4 years, I've only closed a deal a year, but that's been by choice, right? So I focus more on quality versus quantity. That is not to say I won't do more deals if I had the opportunity to, because at the end of the day, I want to ensure that the deals that I'm curating or investment opportunities I'm curating are the right fit for my investors and my investor community based on the criteria and risk tolerance and risk appetite that they have communicated to me. So I do see a lot of deal flow, but I don't go after every deal. What concerns me, especially nowadays, is that the deals that I see have either very thin margin or still have one or more elements of aggressive underwriting. And when I say aggressive, I'm speaking from my perspective based on my risk tolerance. Obviously, for that team or sponsor, that may not be deemed an aggressive approach based on their own risk appetite and investment criteria. So this year I've only closed one deal, and depending on how the market evolves or what comes my way, it may be just this one deal for the year. And it took 12 months to get to that, and the deal before it took 18 months to get to that. So we're not talking about short time frames, but again, at the end of the day, I do this to present opportunities to people so they can start investing in real estate or further diversify their existing investment portfolios. And so it's extremely important for me that I don't just present anything and everything to them, but something that really fits their criteria.
Sure. There's that old slogan that slow and steady wins the race, right?
Oh, I heard that someone mentioned that. Yes. So hopefully that's where I end up. But yeah, that's been my approach actually. Now that you say that, that's been my approach over the years. Yes.
Yeah, that's good. Hey, we're a function of capital. So anything we do in order to close a deal, it's a function of capital and bringing partners in and raising funds in order to do that.
Mm-hmm.
How are you finding investors today? Where are your limited partners coming from? What's that avatar, right?
Mm-hmm. Yes. So there are various sources. I think that it first starts with awareness and making sure that people know you exist, first of all, and then understanding what value you bring to the table and whether there is alignment of goals. And so I do this in a number of different ways. One is, and actually that's been the most uncomfortable one for me, is social media, right? Because I didn't grow up in the social media world, but a lot of investors now are online, and that's how they find you and learn about you. So platforms like LinkedIn is the primary one, Facebook, YouTube for those who are looking for more educational content, the personal relationships, so people that I had known before I focused full-time on real estate investing. So pre-existing relationships with friends and family, and then in-person connections such as conferences, meetups, symposiums, those types of events. That's how I get the word out. Of course, podcasts, that's another way people can learn more about me or perhaps come across my name and what I do. And so that's typically how I initially connect with investors. And once I establish that initial contact, or maybe they reach out to me, usually that's the case, they would then reach out to me. And I'd like to have a follow-on conversations to ensure that there's good alignment, right? If they tell me they're targeting 20+% returns, well, that's not something I can deliver, right? So,
Right.
so in that case, maybe they're better suited for, say, a new construction deal that may achieve those higher returns, but it also carries more risk, right? Or maybe they don't want to do anything with multifamily, but want to do something in storage or industrial, right? So it's important to ensure that that alignment is there before we proceed further with the conversation.
Yeah. So I don't want to give a lot of secrets away today, right? Because you're going to be on the summit in October. You're going to be on a panel
Yes.
on capital raising, and the other panelists are have a lot of experience like you do, and I know that's going to be a great conversation. And I'm certainly looking forward to listening in and learning something at that event. But you've been to the summit before. You go to a lot of events, and it's interesting. There's live events, but there's the people out there that can't get to a live event. They can't take the time out of their life to take time and go. They maybe can't afford it, and but they want to be, or maybe there's family obligations that keep them from going to a live event. This is a virtual event this year, as the fifth year. 20 great speakers and panelists, everything from getting started in the business to, how do I scale my business, or I need a shot in the arm to go to the next level, right? You're going to get all that at this event. What would you tell somebody today who was sitting at the website, and that website is multifamily24.com. Somebody could go get registered, but somebody who was sitting there looking at the information and everything coming up, why should they go to this event this year?
Oh, it's a no-brainer, at least from my perspective. The two primary reasons, right, are education and networking. And then you get to do that from the convenience of your own home. And I'm sure there will be recordings as well if you would like to re-listen, right, to the content. But that's an incredible opportunity to connect with other investors, active or passive, right? If you're an active investor, networking is how we grow our business, right? That's how I found and connected with my existing partners. It's through those types of events. And then for the passive investor, especially if you're looking to learn both what goes behind the scenes, right, or through the mind of a sponsor, but also potentially looking at potential sponsors, right? That would be a great opportunity to do so. And then education, you learn something new. I know you have a number of panels and topics planned out, and again, you get to do that from the convenience of your home. So
Right.
for me, that's don't sit on the fence, and invest in yourself, invest in your network, because that's what propels your growth.
So I know you're going to drop some real nuggets this year. People want to hear some of those techniques and systems that you have in place and that you work on to, look at deals, right? And then be able, because I always tell people, I say, hey, there's a couple of things you need to know, right? Real fundamental in the multifamily space. And I think there's three of them. You've got to build relationships. And you're going to be able to get that at an event like this, whether it's online or whether it's in person. You have to know how to underwrite, and that's something that you offer. I
Mhm.
offer, right, is teaching people how to underwrite. Because even if you don't know numbers and you don't want to do that part of the business, you have to be able to deliver that data to your
Mhm.
investor.
Mhm.
And this is a conversation I had with somebody. I said, if you don't know how to, um, the flow of money and that business plan that's built as a result of the underwriting, how are you going to convey that to your investor and build
Yes.
the confidence in them that you know what you're talking about, right?
Absolutely. Yes. And as a sponsor, whether we officially have that title or not, we have, or syndicator, right? We have fiduciary responsibility towards our investors. And so understanding the deal, the structure, the risks, how they're mitigated, the business plan. I mean, all of that is extremely important to fulfill those duties for our investors.
Yeah, 100%. And then the third thing is raising capital. And I tell people, hey, you should be raising capital all the time. From the minute you make a decision that I'm going to be an investor in this business, you start raising capital at that point, right?
Yes.
Because you've got to build a database and have those people that when you do have a deal that you bring to the market. So I always say the best time is in between deals, right?
Yes, yes, absolutely. Yes. No, it's always about having those conversations because you don't know when the next opportunity will come, right? And I know your team looks at hundreds of deals before they curate the one that's the right fit, right? So, and
Right.
you don't know when that is unless you're looking, but when the deal comes, then you have to be ready to share that with investors who would benefit.
100%. Well spoken. Thank you. Um, hey, real quick, just shift gears. Are you reading any good books right now?
Oh my goodness, yes. I actually just finished one by Richard Wilson on setting up a single family office. I have a lot of interest in that space and kind of understanding that particular investor mindset and what are their fears, hopes, pain points, goals, dreams. And so I found that particularly helpful. And it comes with really practical tips on how to do that. So that's more on the I guess uh, from a capital raising more on the practical side. And then on mindset, I recently finished Grant Cardone's 10x growth, and that really was very motivational and
Yeah.
inspirational.
Yeah, that's a good book. I listen to that on audio, and I'll go to the health club and work out and
Yes.
listen to that. So you're right. It was motivational. So Vessi, hey, I appreciate you and thanks for being here this morning. How do people get a hold of you?
The easiest way to connect with me is through my site, dbacapitalgroup.com. D as in dream, B as in believe, A as in achieve. My contact information, link to my calendar there. And that's also where people can find out more about the underwriting course, should they like to learn more about it and become better educated and empowered investors.
Awesome. Thanks for being here. I appreciate you. And I just want to say goodbye to all the listeners. Thanks for being here again this week. Remember, we're here every Saturday morning, Multifamily Unplugged. Hey, if you haven't had a chance, join our Facebook community, which is Multifamily Unplugged on Facebook, where we're always bringing great speakers and relevant content to you, trying to help you get those little nuggets that are going to help you grow your multifamily business. Reach out to Vessi. Remember, and I'm going to just steal for a second here her acronym of DBA, dream, believe, and achieve. Draw a line in the sand and take some action. Go do what you want to do, what you've dreamed about doing.